would be happening when you sat down here. Okay, so not very good.
Yeah, me neither.
All right, let's go ahead and get started. Welcome, Bankless Nation, ZK world, all the ZKers out there, people who believe in ZK photography, and also the Alfalfa podcast.
About some Alfalfa family members back here.
Yeah.
What's up, Alfalfa fam?
About 2 years ago, I was living in San Diego, and I had just the absolute luck to stumble into these fine young gentlemen. And there's been this unofficial marriage of our community ever since. We would call, I think maybe it was me, maybe it was you guys, would deem Bankless the classroom, and the Alfalfa podcast the bar.
That was your analogy.
We're good at analogies at Bankless. And so we were at the bar before we came here, so I'm going to apologize in advance for any shenanigans.
We're being above board.
We're going to do our best to keep it above board.
The Alfalfa podcast is way below.
Yeah, that is for sure. Maybe you guys can give yourselves a little bit of an introduction and overall your individual vibes. One thing I appreciate about these fine young gentlemen, of which we are missing one, there's actually 4 of them, is that they all kind of come from different walks of life to converge on the Alfalfa podcast and also converge into the crypto world. So they're all businessmen, they're all entrepreneurs, they're all financial speculators, but they all got their own kind of flavor about it. So Armand, maybe introduce yourself and talk to us about your flavor of financial speculation.
Sure. I mean, at the end of the day, we are, 4 entrepreneur and investor friends. We say we're seeking the alfalfa in money and meaning. So the approach we take to the money part of it is we're not biased toward any one protocol or any one asset. If you told me tomorrow that multifamily real estate was going to make me the most money, that's what we're going to discuss. And what we love about David is that he has such great conviction, and we have this balance between us where we can have this dialogue about what we're up to, what we believe in, and we are absolute ETH bulltards, of course, right now. We're going to talk about all of that. But that's really the flavor of the podcast. And then, of course, we tend to inject what's going on in society, what's going on in the culture, what's going on in terms of your philosophical disposition toward life. And we have these really deep conversations that have sprouted and created, no pun intended, sprouted, that have created this incredible community that even you, David, today tweeted as one of the best communities in crypto. I think it's the best Discord on the internet, and it's incredible. So it's not so much about us, it's about the people that we've attracted and brought in, thanks to you as well for having us on the pod, a year and a half, 2 years ago. So my personal flavor is, I'm an entrepreneur, I've been one for 12 years. I invest in this stuff because I want to become wealthy. And I am not at the level that, say, a trader like Steven or a TradFi guy like Eric is, which I'll tell you more about. But I am looking to get rich slowly over a long period of time. And I love this whole world.
Fantastic, that was great, Armand. Eric, give us a little bit of your flavor. What flavor are you?
Okay, so my flavor is I'm a TradFi investment manager. We run
You have CFA in your Twitter profile.
Yeah, I'm a CFA. I'm the crypto CFA on Twitter. I don't post much on Twitter, but I am a crypto CFA, and I think I like to think that I'm on the forefront of blending TradFi with crypto. With great thanks to Bankless, educating me on what I believe is like the best risk reward in the investable universe today, which in my opinion is ETH right now.
They're not just saying that, they also say that when I'm not on the podcast.
I fully believe this. So, we'll get into this later, but I got a lot of TradFi clients who are dipping their toes into crypto, or maybe they're interested in it, and they have fresh money into their accounts, and like, okay, so what do we buy now? And they're like, okay, we can buy Nvidia at all-time highs, or here's like ETH, something that I believe in, like great growth potential, still trading at 40% off its all-time highs. This is like, for me, an awesome opportunity. And Steven and I, we also do another podcast called Irresponsibly Long.
Same podcast feed, different title.
Yeah, but I'll let Steven go next. Steven's a full-time trader, but we run another podcast too that talks about how to make money.
Steven, let's hear from you, the caboose, bring it in the end. Come on.
Hi, my name is Steven. I'm a professional degenerate, I guess. I am the phase. You know how you go on Twitter and you see the cartoon pictures, like posting charts of like coins you've never heard of, and that's me. That's me. I trade everything. I trade index futures and TradFi, but I also trade like on-chain meme coins and NFTs. I'm definitely a profit maxi, but I have a soft spot in my heart for Ethereum. This is my 4th cycle, so I've been through the ringer. I've made a lot of money. I've lost a lot of money. I've done a lot of smart stuff, a lot of stupid stuff. Can I swear in this?
Sometimes.
I'm not used to censoring myself because of the other podcast. But yeah, I met David a few years ago in San Diego, and it's been awesome having somebody to ground me in the reason that we're all here, which is not just to make money, it's to do meaningful things and change the world and stuff. So thank you, David, for helping me keep a level head on my shoulders.
Well, that's funny because I actually kind of say a very similar thing about you, except for making me more degenerate.
I was gonna say that too.
I'm told the people like it. They want more of it.
It's hard being degenerate on Bankless when I really don't want to be
You're
wrong.
talking to senators.
So the Bankless audience is very buttoned up, and I feel like the alfalfa community is like it's wanting a little bit more of like the beer and I don't know, just like the fun.
I was with, I actually got coffee with Bankless First this morning, and she was telling me about like this random podcast episode that she listened to, like the LRT episode. I'm like, that's why that we cannot be too degenerate on the Bankless podcast.
No, you guys are so good. You guys are so good at that role. Thank you.
One last characterization that I'll give Steven is that Steven, before he got into crypto, would yield farm poker tables online. How many poker tables would you have open at once?
I could do up to 30.
Yeah. So imagine a guy with like a bunch of different screens, hot king, 30 different poker tables, and then imagine what would happen when this same individual finds crypto.
This is a common journey, though. A lot of the crypto VCs you guys know, a lot of the traders that you guys know, like used to be professional poker players. It's like a very
internet marketers,
smooth
Hasid,
transition.
Hazu,
Yeah,
they're like the poker archetype.
Brian
For sure.
Pellegrino,
media buyers.
Yeah.
Can you tell your story of how you went head to head against Phil Ivey?
Who's that?
Phil Ivey's like a prominent.
It's a very niche story. Yeah, I beat the best poker player in the world, heads up. It was awesome.
With money on the table.
With money, real money, for realsies.
And you rolled it into crypto?
Not as much as I should have. No.
Okay, so the last time we did this, last time we had a podcast, it was something like April of 2022, and it was right before Terra Luna crash? I don't think we talked about the Terra Luna crash. Okay, so it was something like February, because like Terra Luna crashed in March.
Yeah, it was still like a time where some people were like, this is a pullback, and other people were like, get out. And there was some like uncertainty in the air.
Yeah, David was saying it's a pullback, Steven was saying get out.
We went from like $4,900 ETH down to like $2,200 ETH, and I was like, yo, come on, like 40, 50, 60% pullbacks happen all the time in bull market, guys. And I think every single one of them were all extremely bearish. And I was
it
does not compute. This does not compute.
It's like Steven predicts doom.
Yeah.
That was the first episode of our podcast, Steven Predicts Doom, and that was like when Eve was still 4K.
Okay, so congrats, you guys were right. I was wrong about that one. But then, so that was 2 years ago. We've all chewed glass through the bear market, especially your guys' community, which was formed in the bear market. And now, even though we are not at all-time highs now, either in Bitcoin or in Ether, I think a lot of people's portfolios are at all-time highs because that's what happens when you buy through the bear market. And now we are entering like Steven's your fifth cycle or fourth cycle, fourth cycle, and many people have like seen a thing or two now that we've done all of this again. So like I came in during the ICO mania. I think that's probably true for you guys as well.
No, I came in during DeFi mania.
DeFi mania. Okay, so you're even fresher.
Yeah, Steven got me on board actually initially by showing me that all these like food tokens were yielding 50% pancake swap.
Eric was calling it rat poison, just like
I was like a Warren Buffett acolyte, so I was completely anti-crypto until Steven and Bankless kind of converted me.
But to Eric's credit, I was like, hey, you have to pay $15,000 for this JPEG. And he was skeptical at first, but eventually he was like, okay, and then he bought a crypto fund.
Oh yeah, I bought the pump.
Right, yeah, starting with the point, you start with quality, right? Then you go down the long term. Steven, I actually want to pick your brain a little bit because you're the one who's seen the most cycles. The 2017, we had this ICO mania. We learned to leverage the ERC20 token. All of a sudden, we could mint a bunch of assets. NFTs in 2021, it turns out we could append JPEGs to those assets, and it was a brand new thing. Now we have points, which is like a new, like, hey, we're gonna make another kind of asset. It's called points. like all bull markets kind of spawn this way. Like we find a new mechanism to distribute a bunch of assets. I want to see somebody who's seen the cycle one more pattern than I have. Like how like stereotypical does this whole movement feel, or is this time different?
It's a little of both to me. Like the cycles are interesting because crypto is this funny dichotomy where there's something very real going on here and there's all these gigabrains, right? But also, like 99% of the stuff on CoinGecko is just a complete Ponzi, basically, right? And then we're sort of forced to deal with this reality, and it's difficult to explain it to people on the outside who don't know. They're like, well, how does that even make sense? And so, like every cycle, I feel like there are these things that we evolve on in the degeneracy end, right? So the farming thing was like a big evolution last cycle, right? Like we had like the ICO thing, and then suddenly we're farming tokens, and then we sort of create these weird games we play to get people to lock up stuff so other people can dump, and it kind of becomes like a poker game in a way, and then people figure the game out, and then that whole strategy doesn't work anymore. Now, as you said, like I'm seeing like the points thing. Everybody has points, everything's gamified. Like Blast just opened up, and I thought I was gonna take my money off, and they're like, wait, you just unlocked the 10x multiplier. If you don't take your money out, this could be yours. And you're like, it feels like you're in like an MLM funnel or something, and I don't like it, but I get it, it's effective. But on the other end, there is like very legitimate stuff like that, you know, the sort of like, it is different this time. Like I'm very optimistic for this cycle because ETF is like the main thing. Like this is like a new paradigm where we actually have flows coming in from travel. There's like $500 million a day just funneling into our space. It's like not anything we've ever had before. And you would be stupid to say like, oh no, everything is always a rug. It's always a rug. We always get our hopes up when we get rugged. Yeah, it's true that happens a lot, but something is different this time. So it is and it isn't, and I think you're gonna have to wade through that nuance.
I think the way that I would characterize this is that I've never seen such a large gap between how legitimized this industry is being by the ETFs versus how stupid, degenerate some of the other plays are on the other end of the spectrum. Like if you look at the top 100 movers in the last 7 days, it's Doge, WIF, Bonk, Pepe, and then AI coins. And then on the other side of the spectrum, like Bitcoin put in $250 million in market cap in the last 7 days. And I think like with last cycle, with the pool twos, the yield farming, the high yield, the 10,000% APYs, at least some of the farms had some attempt at like a rationale for why they were doing it. There was some legitimate story as like, yeah, it's like a 10,000% APY, but like we're gonna build this protocol, it's gonna be real. Whereas now it's like either just like you stake your ETH, you wait for the ETF, you buy the Bitcoin, and then you also buy like Pepe or Bonk or something. And then like this chasm of quality is just like no one's paying attention to that middle ground. So it's either just like you feel very safe on the ETF side, and then you also take some of your portfolio and you go as far down the low IQ side of the spectrum as possible. But then there's this massive goalie, which is where I'm used to playing, and which feels very, very like ignored at this big phase of the market. That's kind of how I feel.
Yeah, I avoid that region like my portfolio is very barbell. I am massively like overweight ETH and Bitcoin, and then I'm trading like dog coins and AI. And the stuff in the middle where it's like, you know, Maker and like look at the cash flows, like that's the stuff that in my brain is like the scary thing. Like as a trader, like I don't like cash flows because the cash flows ground people in reality, right? I like the fact that
And reality's bearish.
reality is, yeah, I don't want to be constrained. I want people to think crazy stuff. Like if I'm trading and I'm in it for the gains, like I just want the coin to be able to go as high as possible. Like if somebody can look at it and go like, you know, the emperor has no clothes, I don't want
to have
that.
the potential to go viral on TikTok to like Gen Z.
Right. Right. MKR cash flow is not going viral on TikTok.
No, it's too sophisticated.
Eric, you're kind of in a tough position because, well, I mean, tell me about your position, because like you are talking to people who wear like suits and ties, that have like families and kids, and they need to like have some sort of exposure. What's it like to talk to have these conversations in this day and age?
Well, first, can I just like give a little bit more perspective? Because Steven's been through 4 crypto cycles, but like in the TradFi world, I started investing prior to the dot-com bubble, and then the dot-com bubble bursting. So I've seen many cycles in just like assets. And one thing I notice just through seeing many cycles is like how much PTSD there is after you have a massive downturn, which we pulled back 80% on the majors. You know, some of these small caps are down 90% plus. And I feel like now what we're seeing is like most people who are texting Steven, texting me, their first text is actually saying like, should we be selling right now? Because they're finally back to break even or maybe like slightly profitable on their initial buys. And it's like, no dude, like we're back. We're totally back. And I think to the small cap question, like you find this in TradFi too, where you get Nvidia at all-time highs, but what's outperforming that? Like Affirm and you know little shit memes or whatever. So I think that's pretty normal. How it's like coming to me now is like I think most TradFi clients are still very skeptical about crypto at large. You know, we manage like young professional portfolios all the way up to retirees and stuff. So like a lot of people are crypto never-ers still. And it's hard when I see like the best risk reward trade on earth is like at least crypto majors. It's like it's hard to convince somebody who's crypto never, but like young people are more inclined.
Have you noticed the difference with your clients around how now there is an actual ETF? Like this is a one-way road. The technology is out of the box. It's moving. It's institutionalized. Like, has that changed the narrative at all for people? Where they're like, oh, this is not just going to completely fail. It's not a huge scam.
You know what? Like you would think that brings the validity to it, but I think the only thing that will bring validity to it is price. As price goes higher, then they're like, oh, it is real.
Okay, so this is the crazy thing that I'm seeing happen with the Bitcoin ETF, where like the meme about Bitcoin has been what is Bitcoin's marketing department? The price. And like now that can actually be expressed and excite FOMO in people who don't have a Coinbase account, don't have a private key, don't have like a Kraken account, like whatever, have no previous ways of like getting on chain, but now it doesn't matter anymore. And so like the viral loop between the Bitcoin price appreciation to the ETF inflows, which creates Bitcoin fundamentals, which makes Bitcoin price increase, which like feeds back into just like people FOMOing into their brokerage. Like this is why I kind of think that we are approaching all-time highs well before the halving, which has never happened before in any cycle ever. And so this is like the fundamentals of this bull market, and then like all of the degens who are like know a thing or two about crypto are like, oh yeah, that is real fundamentals. I'm gonna buy Doge.
It's super interesting watching, like, the boomer mind cannot comprehend crypto, right? Like, we look at these, like, 80% drawdowns, right? Or your stuff just going to zero, and we're like, yeah, it's part of the game.
Right. I love it. More. Give me more.
All of these people, for the most part, not to overgeneralize, but pretty much all of them, they don't understand this concept that they bought an asset and tomorrow it's down like 25%. They have no idea. They certainly don't understand it's like, oh, I bought, like right now, there are people who bought a Bitcoin ETF at like 42K and they're up like 50% right now.
In a week.
In a month, and they go into the country club like, Bill, you're not gonna believe this. Like, it's like the equivalent of you doing like 100x. Like you can't even grasp what is happening.
This Bitcoin thing. I get it now.
And these people have money. Like they have real money. They have all of the wealth of the world, basically. Like crypto is very young, and like the bottom rung of the crypto people is the young person with like 5K in his checking account who's trying to run it up. These are guys who have like, some of them have like millions. Like there's real money that can flow into this. And I'm curious, are they going to FOMO, and what does boomer FOMO look like?
There is no way that boomers don't have any less FOMO than any other generation.
But they don't go to the dog coins though.
Right.
But like I firmly believe in this too though. Like I think the barbell strategy is the right strategy. But I'm actually asking you guys now, and this is a real question. Like, to what degree can you actually allocate in your own portfolio real money to like an actual meme that you foresee going either to the moon or to zero? Because like, I posted this quote in our Discord recently from Stan Druckenmiller, who said like, the way to make real money is to never lose and to hit home runs. And when you see a fat pitch, you swing as hard as you can. And it takes a lot of courage to be a pig.
So you're saying I need to increase my Doge allocation?
No, I'm saying like how,
Yes.
like how much
Yes.
how much Doge can you actually
Thank
put
you.
in? Like how much?
It's 1% too
like,
little.
Well, is 1% where you're at? I don't know, cause like I'm actually asking you guys, cause like I have no problem like being irresponsibly long the majors, right? Like Bitcoin, ETH.
2%.
But like on these memes, like, are you just sprinkling dust on it and kind of like having fun, or is this like an actual allocation for you?
The times that I have bought meme coins, it has been on the alpha of somebody else who plays in these markets way more than I do. Ryan and I joke pretty frequently that like the Bankless podcast was like the highest opportunity cost activity that we've ever done, because like we just don't have time to like sift through the markets, and it's like not what we've done. It's not what we do. Also, we're just not those types of
Like
people.
shockingly little alpha coming from you guys.
Yeah, right. It's like the Bankless podcast is not about like any token that's below the top 100 in CoinGecko, you know. And so, like, I have a hard time. Maybe Steven, you can help me unpack this a little bit. I have a hard time separating like what is the difference between like if I want to be a degen, leverage ETH exposure to like Dogcoin exposure. Why can't I just be satisfied with like leverage ETH exposure?
I mean, there's risk of ruin with leverage versus just
There's not risk of ruin with Dogcoins?
look like you can go to zero with a dog. If you buy a high beta asset, right, it goes up or down a lot with like sort of the underlying. It can kind of go to zero, but it can't go negative. You can do leverage in such a way where the coin doesn't go to zero, but your portfolio does. It also goes beyond zero. But like, I do sort of agree with you. Like, there's this element where if you understand how to use leverage responsibly, and you're not just 20xing your whole account, I know like whales who have this philosophy. They're like, ETH is a very good trade. I don't want to rotate to a million things. I can actually take ETH, lever it up like 10 or 20%. That's a really nice gain. And then like, sure, some of these altcoins are gonna outperform, but like, that's also an interesting strategy, is to basically have a thesis, and if that thesis isn't, people do this in TradFi when they trade bonds, right? They trade it with leverage. Like bonds don't move a lot, but it's not about how much something moves, it's about the risk to the reward, right? So if you can define that risk really well, which you can do on an asset like ETH, which is kind of what's nice about it. If you're like a big player, you can put a lot of volume into it, a lot of size, and it's not gonna like wick down to zero on Binance or something and liquidate your whole account. There's like a benefit to that, and then you can very well define like what is the worst case scenario for you and sort of size up that way. So yeah, interesting trade.
I do feel like it's pretty hard to convince a guy like me to sell my ETH for a speculative play when the ETH has upside and I can yield 30% plus on liquid restaking, or just the native yield on ETH is enough to maybe compel me to stay in ETH. But like what we're seeing in EtherFi and etc., it's very hard to beat that.
There's some patterns that I've picked up on, especially here at ETH Denver, that I think are going to kind of define this bull market cycle. Bitcoin Renaissance. There's a big Bitcoin Renaissance day yesterday here at ETH Denver. Like, we have Bitcoiners here. We have like Nick Carter was actually here at ETH Denver complaining about how many like rainbow colors there are everywhere. So like Bitcoin productivity, Bitcoin layer 2s, Bitcoin Renaissance is like one big theme. Restaking, obviously, like the Eigenlayer has events every single day. ETH productivity, I haven't really seen that as a theme, but that's kind of like the underlying current I see everywhere. Like ETH is becoming way more productive than it's already been in so many different capacities. And then I want to actually turn to a conversation of which is like the last theme that I'm seeing, which I think is going to be the biggest one, which is the AI crypto overlap. I heard this take about, I think it was the AGI days on Monday. I walk into this AGI Day summit, and it's Sriram from Eigenlayer giving a speech. I'm like, oh, Sriram, he can talk about anything. I heard this take, which is like, the AI crypto overlap is real, and then as a result of that reality, it will also be memed into something completely farcical and stupid. The real use cases for AI crypto is going to be narrow use cases of one or the other for the other, as in AI will leverage crypto very narrowly to like put one final puzzle piece into something that they need, or vice versa. Like crypto will put an AI puzzle piece into their larger system, but then, and so like it's a narrow application of each, and then so those are the real actual fundamental uses of both for the other. And then like there's the meme side, which is like the 50-50 split, which is like 50% a crypto project, 50% an AI project, and it like just leverages the AI crypto meme out to a T. And I see these like AI crypto particles colliding, and I'm getting like flashbacks of 2017 when people like spun up a website. They're like we already have seen crazy financial speculation in the AI space before it even came to crypto. But what does crypto offer the AI industry? It offers fast liquidity. It offers fast tokenization. You can already like raise a $100 million startup as a result, as a wrapper around of ChatGPT, and then you go to crypto to like tokenize it, get liquidity, play in the arena. And so Armand, you actually have a startup in the AI space. You're also invested in the crypto space. I kind of want to get your just like vibe about like kind of what you see about these particles, these two particles colliding. What do you have? Any like thoughts you have for next year for us?
So, like in terms of how they collide, I think like actually there's a lot to be determined still. I look at it as AI native companies. So my company is called Steno AI. Oh, thank you. And at this point, every company needs to have AI as part of their tech stack. So I don't even look at like AI as a classification anymore as like, oh, this is an AI type company, unless it's an infrastructure company, right? And in terms of how these two particles collide with like AI and crypto, I think that's exactly correct. That like there's going to be a missing puzzle piece for an AI company where crypto or blockchain comes involved, or vice versa. That I don't know a lot about. I know Stephen was talking with one of our community members last night about the $1 trillion AI coin, the potential one, and I want to hear about that because we didn't get to talk about it on the lift back home. But at the end of the day, I think it's just infrastructure play, part of your tech stack. And do you require it? Do you absolutely need it in your tech stack in order to accomplish the outcome? No, not necessarily, but I think companies that don't, everyone's talking about this, is essentially a meme at this point, will be rendered obsolete by the competition that does, because it gives you a significant advantage. And the moats are not in technology though, the moats are in distribution, in user experience, in brand. I think the people that thought that there were moats in the tech or in the data ended up being wrong. And a lot of the venture funds out there like Sequoia are publishing papers about this and realizing that, yeah, the advantages we thought were there in AI, the companies we were investing in, were actually making a mistake. We should have invested in the companies that just had incredible user experience and that could capture a market as quickly as possible. So that's where I've been focused. I'm more deeply immersed in the AI side, but I don't know, curious what you guys think.
Well, you spoke about those two atoms colliding in very esoteric terms, at least that's the way I heard it. Like, one thing that I'm maybe thinking about is like how with AI, like we can apply crypto's ideology to it, like decentralization and permissionless to AI, where I think in AI what you'll find is like a lot of it's going to be censored. And I think that leaves open a pretty broad opportunity for crypto to play a role, like just in that narrow niche, but it could be huge.
Yeah, we were kind of early to, like, we were talking about, I don't know if you guys are familiar with Render. Render is, I don't know if it's Render or BitTensor now that's the largest AI play, but Render's been like a huge outperformer, probably like $7 right now. But you know, we were kicking this around on the podcast like a year ago at like 20 cents. Like the idea that you know, like, hey, AI's a thing, NVIDIA's pumping, what is the AI equivalent to this? But like the idea that you can kind of rent out your GPU, like your excess GPU space, isn't super interesting to me. And I think Armand has said, like, for his company, that's not necessarily something that crypto solves. But when I look around at what's happening right now, there is this element of censorship creeping into AI models, and it's giving me the vibes of why crypto is created around money. This idea of like censorship-resistant money. That is something that's interesting to me. The idea that like there's going to be some sort of clampdown on the models, or like we want the models to be like more open and transparent, and the government gets in the way of that. Like I can totally see that balloon getting squeezed and a lot of that flowing to crypto. And I know that there are probably some incredible gems out there in like the smaller cap space right now that are going to be like 100x's when this. I think everything is inevitably going to go like very max stupid, and AI in particular is giving me kind of like the early ICO vibes, like 2017.
Right.
So I'm not expecting stuff to go up and then stay up, but it's going to be kind of like a similar thing to the early internet, where the market sort of sees the promise, or at least like the promise on the horizon, and everybody apes in, and things go way too high, and then sort of die. But there's going to be like a lot of opportunity there, and that's definitely where I'm trying to dig a lot right now.
One of the panels that I was listening to was one of my friends, Casey Caruso, was on, and it was about open AI models, not OpenAI the company, open source AI models, and in contrast to closed source AI models. And the idea that the vibe on this panel was that we want as many AI models that exist, that there are websites out there. The AI models can be as expressive as we want them to be. We can have literally limitless AI models. And she agreed with that like intention. That's a good vision, that's a noble vision, it's the vision that we want. Like we should have permissionless AI model development. But then she brought everyone down to reality, where she said like there's so much centralization forces behind the tailwinds of people with all of the data and all of the compute. And so it's really great that we want as many AI models out there to do all of the things that we would want them to help us with our lives with. But when like two companies own all of the data and have all of the cheap access to compute, they are still going to be the ones that have the AI models that everyone uses. And so it's going to converge on like Bard and ChatGPT or whatever. And so we don't actually have that push towards the long tail of permissionless development of AI models. And the panel agreed, like there is a culture, there is an ethos, there is a vibe in the crypto space that would pull the demand down towards the long tail, because what do we have at crypto? We have permissionless money, we have permissionless innovation, we have permissionless access to data, we have all of these like puzzle piece vibes, but without actually being able to imbue them into the AI system. But this is like the optimistic case for the AI crypto overlap, is like crypto brings some of its value, some of its ethos into the AI space to help fix some of its problems. And to me, that gets me like very inspired, very optimistic about the future. And this is like kind of the content that I predict us talking about at Bankless. And then, because we're talking about this, we're going to talk about all these fundamentals. And meanwhile, the AI moon coins are all actually going to be the thing that makes you all the money. And all of this talk about fundamentals is going to just be like 10 years down the line, and everyone's going to like hate on Bankless once again for not talking about the memes. This is kind of how I expect the next 4 years of my life to go.
Can we talk about the elephant in the room a little bit though?
Sure.
Because I feel like everybody in this audience, everybody here at this conference knows how to buy these AI coins, right, on chain. But for people in my world, they're not going to be buying this. They don't know how, unless they go to Coinbase and trade these things. So Coinbase stonk is the actual trade for crypto.
That's the elephant in the room, the Coinbase stock?
Yes, Coinbase stonk at 50% below its all-time highs still is just like staring you right in the face. Buy the hell out of that.
Yeah, I mean,
Not financial advice.
No financial advice. Couldn't be done.
I mean, we've been talking about that forever. But I want to go back to what you said. I really like that, dude, because the ethos of crypto would really benefit AI. And OpenAI is getting sued right now by Elon for that reason, right? Came out saying like we're here to develop this like open system and having this like positive ethos of like benefiting humanity, to now just being so for-profit driven that it caused that entire fallout that we all saw, that drama. We can think that way. That drama that unfolded, right, with Altman. So the reality is, I think that there is a shifting and a rejiggering that needs to happen in that space. But the idea of that many models, I think what you said about the data is really interesting. I think people think they have the data and they think they have the advantage in the data, but they really don't. And even if they think they do, they're going to end up getting sued by the New York Times for it. So it's like whether you're scraping or you think you have a license for the right data source, I don't think that's where the advantages lie, personally.
One thing that I know has happened in the last like 14 days or so is that Arweave and Filecoin are up bigly, and we can only attribute that to the AI. That's an AI pump for sure. But like what I'm confused about is that a low IQ AI pump or a high IQ AI pump? Because if we want open models, open AI models, open compute on AI models, you need something like Filecoin. But if you are just like your first year into crypto and you're like playing in the AI crypto like overlap meme coin zone, like that's a pretty sophisticated take to really understand that Filecoin is actually like the infrastructure behind AI. So like Steven, do you have an opinion on this? Is like if Filecoin pumps because of an AI narrative, what side of the bell curve are we on?
I don't have a strong opinion on this, but like my gut has been like that's not really a pump I want to chase, because it's a pump that's like too entrenched in like actual fundamentals that I don't see playing out this cycle, right? Like if you want to be, there's this third category of AI plays that I've talked about, which is like stuff that wasn't AI, but it was kind of AI adjacent, and they just kind of, maybe they added AI in the name, or they kind of changed some stuff in the docs, and now it's basically AI. And then storage is a good example of that. You mentioned like Arweave is up so much, and that was something we talked about, but I missed and didn't put the trade on, and I'm definitely upset. Same with Filecoin, but like at a certain point, that's very measurable. Like if the coin is pumping because, oh, we're gonna have all this data that's going to be put on chain as a result of demand for these models, it's the same as the revenues. Like if the revenues don't materialize and you kind of position your coin as like, oh, it's like a multiple on earnings, then you're toast, right? And if you're really like, everybody is going to use this, but like after a certain point in time, like it's just like a ghost town, then the market like can't, it comes to its senses, and the bubble pops and it sort of goes away. So not really chasing.
I've never heard you speak on fundamentals for so long. That was amazing. No, I think that being left curve or right curve, it doesn't matter, because left curve still wins too. Just be dumb about it. Like I thought he was gonna just say, buy something that has AI in the name and has a fresh chart.
No, left and right is fine. You want to avoid the middle in this space. The middle is where you kind of get killed sometimes, right? And I can definitely see like Arweave being kind of like a middling trade. If you are like the trader type, if you're like I'm investing in this because I want to make money over the next 1 to 2 years. If that's not your shtick, you're in it for the long haul, fine, that's like a different animal. But I think a lot of people in the space are like, I want to buy a coin that's going to go up in the next 2 years. That's kind of why I'm here. And that's where you get killed, where people tell you these kind of theses that kind of sound kind of smart, and then they just don't materialize, you know? I would rather be like just like ETH or something really stupid.
So we're gonna talk maybe for a little bit more, just to make sure we cover all the bases about this incoming bull market, but we'll also have time for Q&A for any of the degens who want to ask your degen questions that you're maybe too embarrassed to ask your friends or your moms or your financial advisors.
Yeah, you're too embarrassed to ask your friends, just do it on Bankless live episode.
Yeah, do it live on Bankless, yeah. Does anyone have a corner of the crypto market, the 2024-2025 crypto market that we haven't covered yet that we want to bring up?
NFTs, bro.
NFTs. Okay. All right. Can I actually start with a story here? This will be the most degen story that I will have ever told on Bankless, because I don't talk about these kinds of things, except apparently now. Okay. So I fumbled my Pudgies about 4 days before Luca Nets bought Pudgies, and they pumped from like 0.7 ETH to like 1.5 ETH, and now they're at like 20 ETH. Yes, thank you. And then what did I do? I kind of just held that cash. I was trying to clear out, I like rotate wallets every now and then. So I was trying to move davidhoffman.eth to a new wallet, just kind of like not have any of the approvals. And this is something I do regularly. So I was trying to move all my wallets. I was like, I'm done with JPEGs. I just got burned by JPEGs. I bought these flower things for like 12 ETH, and that was the absolute pico top of this, whatever. And so I sold like 3 of my Pudgies for like 0.7 to like 1 ETH per. I discovered Mad Lads a few months later, and I take in that same wallet, I buy a Mad Lad. I had to like send it to Coinbase, same capital. So I sent it to Coinbase, converted to Sol, touched the Solana blockchain for the first time, bought a Mad Lad at like 50 or 60 Sol, I think, when Sol was like $12. And then that turned out great. And then Mad Lads pumped to like 120 Sol. I sold my Mad Lad for like 200 Sol after Sol went up like a 10x. And then I took that capital and then I threw it, I do not recommend doing this, but I threw it into a 10x leverage long on DYDX about like 2 weeks ago.
Are you?
Secret DJ.
I threw it into 10x.
What is happening right now?
10x DYDX leverage long, and I closed it out like yesterday because I saw how high funding rates were. And then you know how much money that I have now? About 1 Pudgy's worth. And a massive tax burden.
Oh my god.
Dude, I was gonna give you credit because you get a lot of flack from the Solana community. You can take so many punches from these guys.
I also had like one of the reasons why I take flack from the Solana community is because I'm the only one in the Ethereum community who pays them any attention and actually engages with them.
But I was going to give you credit because I think I remember when Solana was down in single digits, you tweeted this thing, said like, this is your moment, Solana, where the community rallies around it, and you either like, you come back the way ETH did when ETH went down to $80, or you die, and they're back. But I thought that was cool, because you were like supportive in that moment.
Yeah. I was supportive to them on their floor, and then they will say that I was like punching them all the way on the way up, which I still contest, but whatever.
I mean, I'm happy with that purchase.
Oh yeah, you've been kind of Solana.
Yeah, of course it was good.
all the way down.
Yeah, that was easy.
Stephen was even famously saying like, yeah, you're dead.
Yeah, on the palm. Yeah. So good luck with your Solana, sir, was the line.
Yeah, you can test this. But
Yeah,
he
you
can
won't.
test this, but he didn't.
I actually bought Solana at like $11
Oh, here
because
we
of
go.
David's
Of course.
tweet.
Here we go.
I was like,
Yeah,
guys, got a
by the way,
point there.
You bought the
you were
Pico bottom of
wrong, but I
everything.
ended up actually buying it cheaper than you.
I sold it at 20. but
Hey, it was a trade. Okay.
But I did think it was a good
So
idea.
we were talking about something on our pod yesterday that I think might be interesting. I don't want to rehash it for those that aren't listening, but you know, borrowing ETH against ETH to buy some NFTs that you believe in right now, I like that move. You know, downside is you lose the ETH. You were going to lose it anyway by buying the NFTs. Upside is you're compounding exponentially on some of these. Like you're looking at some of these that have historical value, or that you really believe will come back. DC Investor's been tweeting a lot about this as well. I think he's got some really good takes lately. Very, very bullish takes, especially on the art NFTs. I'm like big on like, you know, even simple things like curio cards or MFers. Like I want them. I believe that that's a place for me to place ETH that's gonna work out in the long run. But yeah.
I think if the bull market continues, we'll see a resurgence in NFTs for sure. And I actually do believe that this strategy of not selling your ETH but borrowing against it in ETH, that actually protects you on the downside because you don't get liquidated borrowing ETH against ETH. And you can YOLO it into some NFTs that make you ETH on the way up. So
if your goal is more ETH, it makes sense. But obviously you have to be correct that that's gonna make you more ETH.
The risk is that your NFT goes down in ETH terms.
But that was the risk when you bought it
Anyway.
initially. Then you sold your ETH for that initially. So like as a this or that, I prefer borrowing because downside same, upside better.
That's better.
There is a weird spot in the market right now where nobody wants to sell their ETH because it's just printing you money. Like everywhere you put it, you're farming points. You can even like leverage farm points now, which is like the latest innovation. Like if you can leverage farm eigenlayer points, like stuff's getting real weird, right? And as a result, like we've even seen like L2s, like Optimism, like Arbitrum is just absolutely getting murdered versus ETH, because I think a lot of the market was just like, wait, I can make like a 50% APR holding this thing right now, and it's like an amazing asset, why would I hold anything else? But after all this kind of restaking stuff passes, there's going to be a lot of newly wealthy ETH people, they're going to rotate into stuff. NFTs are one of those things. So if you're sort of like a responsible degenerate, this is like an interesting way to slowly rotate into that without getting out of the current thing, without like having any taxable gains. Now, you also have to be that guy who pays back the loan and isn't just like, you know what, everything's pretty fine. I'm just gonna keep the loan open and own the NFTs and own the ETH, and then like a year later, bad things happen. But yeah, we were sort of talking about this as a potential highly profitable trading strategy.
It's an obvious one, whether it's left curve or right curve. It's like when people make money, like yeah, you know, they don't buy, in the crypto space, they don't go buy watches. Like that's not what we do. You know, it's just JPEGs and flexing a $50,000, $100,000, $1 million JPEG.
All right, but this was the narrative of last cycle, right? And I totally believe you, like some of the NFTs are totally going to do well, but the difference between this cycle and last cycle is that last cycle was the NFT cycle where the long tail of NFTs also did very, very well. Like you kind of couldn't miss until the cycle was over. But that's not what I see going on this cycle. I see some blue chip NFTs, like why are Pudgies a thing? Well, because Luca Nets fucking executed. Right? And so like the long tail of NFTs, I'm not sure are going to perform in the same way this cycle as last cycle. To me, the long tail this time is like the AI crypto overlap, the Dogecoin, meme coin overlap. So,
I have no desire to play in the long tail of NFTs.
Yeah.
And for the record, I'm not a good NFT trader. Like this is like a funny thing for me. I know what lane I'm in, I know what I'm good at, and I do that. But I'm still very bullish on punks. Like if that's like a thing that you could afford to buy, I feel like punks right now, they're gonna lift off very fast in my mind, and it's gonna happen soon, I think. And I actually do want to get another one right now. It feels like it's getting to that point where you can feel like the wealth kind of building up and the vibes kind of building up, and the NFT boom is born out of this sort of like recklessness, kind of where everybody's feeling good and a little like, yeah, maybe I'll buy a
No one's
JPEG.
taking a snapshot of their portfolio amount in dollars and posting that. They would buy a punk to do that. That's exactly why the wealth is just going to keep accumulating there.
to me, the punk floor is an index for how cool Ethereum is.
Yeah.
And that's kind of like my gauge. And like, I'm actually kind of very happy with Ethereum not being cool, right? Like Solana was cool for Q1, Q4 of last year, Q1
Yeah,
of
we
this year.
hit peak not coolness in December, I think.
Right.
Like I could feel
Right.
it happening. Like I could sense the local top of ETH Sol.
Right.
Especially when Santiago was like, I'm updating my Sol flipping prediction to 50% now. I was like, okay, I'm out. Like,
Santiago's like market indicator as an individual has been like some of the most like hilarious like memes that he's come out of him. I mean, it's been great.
bless him.
Can I say something again, because I think it bears repeating?
A bearish what?
Bears repeating.
Sure.
Coinbase stock.
All right, you want to go back to Coinbase stock? We're getting
Well,
some claps
we're-
from the
we're
audience.
talking about
Raise your
things.
hand if you own Coinbase stock in the audience.
Can I just say,
It's
like,
like 30%.
Wow.
Very
I
simply-
expected much higher.
So you guys did a bull case for Coinbase on Bankless. I was screaming at my monitor because I think you missed the whole thing.
Oh wow. Uh-oh.
Coinbase stock at the previous cycle generated $17 of earnings per share, and you're talking about how it's diversifying its revenue base. You're not talking about the trading revenue. The trading revenue is going to drive the stock higher.
You're talking about the traditional exchange business. of
Retail
Coinbase.
traders come back. We're in a bull cycle. Retail traders come back. $17 EPS is FUD. We're gonna surpass that. And like you guys talked about, there's diversified revenue streams. So you slap a 30x multiple on 20 times earnings, a $600 stock.
Wow, this guy speaks trad.
It's very simple. Coinbase stock.
Yeah, I remember Eric being very upset that you were sort of like middle curving the Coinbase trade. Like he's like, they're talking about
we
how
are the
Base
hosts.
is going to produce these like random cash flows. He's like, no, apes are going to come back. They're going to ape. They're going to make a lot of money. That's it.
You and Ron are like, oh, USDC yield. Oh, cool.
All right, it sounds like we need to do Coinbase stock round 2 then. You want to go and come back on Bankless?
I'm there for that.
Yeah, I would listen to that. That'd be great.
The other thing about Coinbase stock is this like mark to market thing. Do you know about this, Eric?
Oh, they're accounting. Like they hold crypto on their balance sheet.
Not just crypto, but also the Coinbase Ventures.
Yes.
Okay, yeah. So they impaired it on the way down, and they weren't able to write it back up. That probably adds $4 of EPS right now if they market to market.
Is that $4? I mean, $4 is pretty good. Is that gonna that's not a massive thing?
Well, compared to $17 of trading revenue last cycle, it's still just icing on the cake. But it is meaningful because right now they just reported their first positive earnings in 2 years, and that was $1 EPS. So you 4x that just on this like accounting rule change.
And so it's next earnings that this accounting rule change will take place, and all of a sudden you're like napkin math, $4 earnings per share will be added onto the statement, the report.
Yeah.
And this is something that Wall Street's probably not privy to, probably not accounting for.
Probably not. Yeah, some, but probably not. Yeah.
Okay, and so like my kind of bet is like, well, that's gonna just add momentum to Coinbase stock. Well, it is. People are waiting for it to like. Oh, it's up a lot. Is it going to continue to be up a lot? Is it going to pull Nvidia?
$50 billion market cap company.
Yeah, $50 billion is not a lot of money in the TradFi space.
After 2 hours of a Bankless episode, your first good take on Coinbase.
Oh, wow. Thank
Wow,
you. This
shots
is a
fired.
good wow.
I'm a big data guy.
You will
This is
get
a
one
little
more of
aggressive.
those, sir.
That's easy, dude. I love you.
Okay, so is the most bullish case for CoinStock that it turns into a momentum play?
I don't think so. I think that its fundamentals are going to support a much higher stock price.
Right, which turns into like we all like
Yeah,
to
yeah.
like to speculate on the future.
And then I think you're right. The momentum
Yes.
sort of like increases the multiple that's applied to the earnings. So you could see this thing go to 4 digits or something crazy with the momentum behind it.
And that has to just run right in parallel with the actual crypto bull market.
Of course.
Right. Yeah, Coinbase is like the custodian for I think like 80%, like 4 out of 5 of all the Bitcoin ETFs out there. Which like I think the take in that episode, maybe you don't like this one, Eric, was that like the fact that Coinbase is the custodian of all of these BTC ETFs and future ETFs will just be a huge narrative tailwind, which I will also just lump in the momentum category.
No, I like that take, and I think there was like,
Thank you.
I think there's good take. I think there's some FUD around that too because the company had previously generated so much of its revenue off of Bitcoin trading, and now with the ETF launch, you'd see like a decline in Bitcoin trading. But I think that's fine because retail doesn't come in necessarily and buy Bitcoin; they buy all the shit you guys were talking about earlier, Doge and WIF.
All right, is your Coinbase stock itch successfully scratched? Are we good?
Can I raise a few more hands? Who's gonna buy Coinbase?
All right, do you have any last topics before we're going to open it up to questions?
Can we just talk about the generalized macro sort of backdrop, macro regulatory generalized market psychology? To me, it's this like perfect alignment of so many things.
Stars are aligning.
So many tailwinds. Like, I mean, if you look through our text conversations, there was a conversation we had like this summer, like in July, and I think I was just like, oh my God, I'm so bullish, I'm shaking right now. Like I saw what was happening and I just couldn't get out of my mind. I was
Had
like,
to take a shower?
It's over. It's like we're all gonna make it. It's like amazing. You've got the election, you've got rates that are going to be falling that haven't even fallen yet. When they fall, they're gonna make real estate go up and people are gonna get richer, they're gonna buy more stuff because they feel richer. And Janet at the Treasury is very apparently like fighting Jerome and not letting him do his thing, and they're sort of pumping the market because the government wants the stock market to go up because that's tax revenues, right? As long as the people can go to the grocery store and buy stuff and not get mad at the people in charge, they want to like assets to move so that they have tax revenue to pay down like the debt that's happening. And then meanwhile, in crypto, like if you asked everybody for targets like 2 months ago, everybody was like, oh, I don't know, I think we can hit like 7K Ethereum, maybe like 10, I don't know. Like everybody was so psychologically down bad because we're all just biased to the last cycle, which was so bad, especially relative to our expectations. We thought we were coming into the first institutional cycle, and we had Sailor, and we're like, oh, we got Grayscale, and there's going to be an ETF, but it ended up just being like unbelievable Ponzi degeneracy. Everything blew up, everybody went to jail, and the people who survived are just like in a bunker like, oh my God. And the first thing in their mind is like, I gotta take profits, I gotta take profits, I gotta take profits. And suddenly nobody has the outrageous targets in their mind anymore. And to me, that's like the perfect setup. That aligned with all the macro backdrop, aligned with the fact that this is now a fully like institutionalized asset class with consistent flows in the same way the S&P just has this persistent bid buying stocks every day from 401ks and pensions. Now we have that in crypto. It's going to be in Ethereum soon, and ETH has like a third of the market cap of Bitcoin, and people are just going to go, I'm going to buy both of them 50-50. Like people aren't going to weight it by market cap, so ETH is going to disproportionately benefit. And like you talk about like the yield, TradFi loves the freaking yield. There's so much stuff. Sorry, I'm just like rambling now.
I'm so aroused right now.
I just
ridiculous.
David, you're gonna like this, but on our latest podcast, Steven called for 40K Ethereum.
Oh, I listened to it. And I am aware of my own psyche, my own biases, my own tendency towards optimism and bullishness. And anytime like anyone spits out all of these fantastic facts like this, I'm like, I'm on board. And then I watch myself be like, I'm on board. And I'm like, ooh, you just made yourself more bullish. Like it's not the same thing as a super cycle, but you're starting to get into like super cycle territory. And so I'm trying to like also check myself on that as like, oh, like if I start to just get more bullish because it's a bull market, that's a fallacy. That's like something that I need to like check myself on.
Yeah.
So I am so happy, Stephen, to join your ship, but I will be very aware of what ship that I just like hopped onto. That I'm gonna like try
in so many ways, it's exactly what you're describing. You know?
Yeah, a little bit, yes. That's the fear. That's the fear.
PTSD. Like, I should know better this time. You know?
We are at all-time highs before the halving, and I would say that is a +1 to Steven's analysis right there.
Yeah. Like, there's this thing where people sort of learn a lesson, and like, so the ETF is a good example, right? Everybody's like, ETF is sell the news because everything is in crypto is sell the news, and that's like the sort of Pavlovian response that people develop. They're like, oh, event, I sell because event is top and it goes down and I have pain every time this happens. But people don't go like a level deeper and say like, well, why are these things sell the news, right? And if you go like a level deeper at why other stuff is sell the news, you can kind of look at the ETF and be like, you can, like there were these giga brains who looked one level deeper and said, well, actually this isn't sell the news because underlying this, there's something different here. There is something structurally different in what this enables that has never before existed in the asset class, right? But everybody is just like, they're just associated with pain, and that's just the response. There's not like the deeper thought, you know?
You guys ready for questions?
Let's get some questions.
All right, think of your dumbest, most stupidest, most degen questions that you've had in the deepest
That guy
parts
looks
of
like
your
he's got a
soul
stupid question.
that you definitely want to ask.
I've got a lot of stupid questions. First off, never selling the Moloch Slayer. Let's just get that out of the way.
Wait, sorry, can you say that again?
I'm never selling the Moloch Slayer.
That's an NFT. That's an early Bankless NFT.
Wow,
Bankless NFT.
that's deep. That's a deep cut.
All right, so my stupid question is, what's the bull case for Milady's Romantic?
Are you a Milady guy?
I have considered becoming one.
I can see you as a Milady.
I'm very close friends with a Milady guy, and like the funny thing is like he's like very straightforward. He's very thorough. He's very pragmatic. He works for the EF, and he's like he's not a 4chan guy at all. And he's got a Milady, and he just loves the Milady. And so like there's this like online offline dichotomy where he's like decently buttoned up, decently professional in the front, but like the lady in the back. I could vibe with that.
I have never vibed with them personally, and I can't buy an NFT that doesn't at all speak to me. Like I can buy any coin that like I think, but like an NFT, there's like something about it where like I can't just trade it. Like I have to like them a little bit, and I don't get Miladies.
I think like buying an NFT is like kind of buying a click in high school.
Yeah.
And I'm a big MFer guy, and like MFers can't be too cool. Like they're just not cool enough, but they're also they're just like safe. They're like off-brand, little indie, little unique. Never gonna blow up, but always gonna be above the floor.
I love MFers. I'm kind of into that like MFer dick butt kind of trade.
Right.
Oh, I like dick
they're
butts.
like
Picked up some
they're like kind of cheap, but they have like some sort of traction. They have some sort of something. Like you can see them being a survivor and doing well. Like I'm into that.
Did you mint the little dick butts? You remember that?
I did not. I don't know about this
Okay,
one.
there was like-
You mean MFer dick butts?
No.
There's MFer dick butts?
There's MFer dick butts.
Wow, what a crossover.
They look exactly like you would expect.
No, they had like tiny, like they had their
No.
own version of like a mutant to an ape.
No, I
Yeah, and they
have
had a
not
video
heard of this.
game that you basically had to play to mint. It was ridiculous. It's actually very well done.
All right, very good, stupid question. Who's got another stupid question? Where's our microphones?
Hey, I was wondering, obviously, when it comes to trading in crypto, it's obviously super narrative based, right? And right now, it seems like AI is stealing the light. I'm wondering if you guys think real world assets will steal any light in this cycle.
Oh, can I go on this one? I actually have a take here. I think real world assets are a bear market narrative. I actually worked before, in my last job before Bankless, I was at a tokenized real estate startup. So we were trying to tokenize real estate. Actually, it's still running. And one of the things that just the whole real world asset industry frustrated me was how slow it was. And I realized that real world assets is not a crypto innovation. It is a legal system innovation. It is a pen and paper lawyer innovation. And in the bull markets go so fast that real world assets just can't keep up. And so I think there's no coincidence that real world assets as a narrative came during the bear market, because things are slower then. Think about how fast AI is and why it's coming into vogue now. So I think as a bull market narrative, it just doesn't move fast enough to be sexy, to claim attention. That's kind of my analysis. Do you guys have any follow-up thoughts?
I totally agree with you, and I've mostly avoided this stuff the play, because in my mental framework where I want to be here and here, it's just right in the middle, right? Where I don't want stuff to be. So yeah, it's not a part of my thing that I care about.
But what if one Ondo equals one condo?
Okay, so one Ondo equals one condo. So that was a good trade, but I really liked the meme. I was this is a good meme. It was a good meme and it was a good chart. It's not necessarily that oh, I'm analyzing Ondo and thinking all these assets are going to come on change. It's a total trader, crypto native mentality. RWA was a 0% part of that trade.
That was a pretty smart question. Let's go even dumber. Lucas,
smart,
you got a
too
question?
smart.
Can you hear me okay?
Oh, yes, yeah.
I just wanted to say that we've seen crypto winners for a while, and what just happened with the Department of Justice was then culling as soon as that's finished, we're having what's happening now, which is this. The institutional guys are now sitting there, they understand tokenomics, they're able to actually take the time and energy to understand what it is. I just want you guys to talk about, just for a minute, what you think happens when a bigger percentage of the institutional folks get the light bulb about tokenomics and start actually learning what the infrastructure underneath this amazing situation really is. What do you guys think is happening? Rational exuberance? Refining monitoring? I'd love to hear you guys.
So if you listen to both Larry Fink and Sandy from Franklin Templeton, if you just listen to all the interviews that they give and you talk to the BlackRock people, they are just not, they don't care about the ETFs. As in the ETFs are table stakes for them. They are thinking well beyond the ETFs. And they are thinking both of them have leaked alpha, if you will, leaked alfalfa, because they are all talking about identity. They are all making identity plays in the Web3 space because they need to figure out how to play in the tokenization world via compliance. They are trying to figure out how to play on chain because they see the opportunity there, but they need to do it compliantly. So all of them they get to the conclusion of oh, tokenization is really bullish for us, the people who have all the assets, but we need to do it compliantly, therefore we need identity as an infrastructure. So this is something I'm actually kind of keeping an eye on, because BlackRock as the identifier of Web3 is the dystopia that I do not want. But whether that's actually what they impose, and if they do some regulatory arbitrage and try and make sure that they are the identity system, that's the world I don't want. I don't think that's likely, but it's something I'm keeping an eye on. But you can definitely tell that these big institutions who get what they want, why are we getting the Bitcoin ETF? Because BlackRock wanted it. They want tokenization. They need to satisfy the powers that be with identity, but eventually we're going to get there.
David, can I ask you a question to follow on? Because I've seen those same interviews that you're talking about where Larry Fink talks about tokenized future, which I think is incredibly bullish. I guess the question that I have, maybe you have some insight on this, is I don't necessarily envision them using public blockchain. What about a private blockchain?
So this is the Chainlink thesis, right? Where they get to use both. So they make a private blockchain for their own internal ledger, their own internal tokenization, and that is their test net. That is their, it's like kind of like skeuomorphic, like why do you need a private ledger? But the reason why you need a private ledger is because they have all control over there, and then something like Chainlink actually does make it interoperable with the public system.
Right,
So you tap
CCIP.
right,
Yeah.
you tap into like Ethereum liquidity, but BlackRock assets. Like this is the Chainlink thesis, whether you believe it or not.
So, last cycle, I sold all of my Bitcoin at one point because I was, like, as a trader, people think your job is to sort of like predict what's going to happen, but often it's to simply look at what the market is telling you and to just ride it, right? And when I looked at the market last cycle and I looked at the Bitcoin narrative, it just didn't make sense to me because what did people really want to do on chain last cycle? Well, like stablecoins were kind of the killer app, and we're settling like trillions in stablecoin volume. And that was kind of like a big aha for me because I was like the Bitcoin vision is this weird idea that everybody's gonna wanna go into this world that is totally off the rails and absent like the checks and balances of like the state that we live in. And my personal experience has told me that that's not how people behave at all. They're very risk averse. And stablecoins to me were interesting because they sort of like allowed you to kind of have one foot in both of these worlds, right? You can have like the permissionlessness to like a large extent. Obviously, Tether can freeze your funds and Circle can do the same, but like the transparency, the level of permissionlessness, the ability to kind of use something so seamlessly, it was like, that was like an aha for me. And one of the reasons I became super bullish on Ethereum was because I was like, oh, Ethereum enables this element of sort of optionality, where on top of Ethereum, you can actually have like a very like, kind of like, you know, cypherpunk sort of thing built on top of it. You can build like Tornado Cash, you can build these stable coins that are entirely backed by ETH, but you can also build Tether and USDC. And then I think you can also now build like permissioned L2s where people can kind of like transact in a way that they're comfortable with and they know. But I also think that like a BlackRock will like to be able to settle on Ethereum, and the idea that ETH can kind of be this like settlement layer for stuff, and on top of it, we can kind of experiment with this whole spectrum is like really intriguing to me. And that's why like in my non-degenerate brain, when I'm thinking about what I want to hold for years, like I gravitate towards ETH, and that's kind of like the crux of my thesis there and why I hold it.
Beautiful. Anyone else? Who's got the next mic? There we go.
Hey, how's it going, guys? I don't know this is a stupid question, but then, so I've been diving deep into the Eigenlayer ecosystem. Spoken with a bunch of LRTs, LSTs, operators, ABSs out there. I just don't understand where the use coming from. And more importantly, I've also been looking at Babylon Chain and Bounce-Bit. My question is, do you guys envision a future where Bitcoin restaking could probably become bigger than Ethereum restaking?
Okay, the question is, do you envision a future where Bitcoin restaking becomes larger than Ethereum restaking?
Ethereum is used as a settlement layer, right?
Right.
We're making the security of Bitcoin.
Yeah. One of the cool things about Eigenlayer is that you can only build Eigenlayer around a money. I mean, like you can build it around a soul, but just like you really need the monetary premium for that whole restaking system to work. And so from that lens, like Bitcoin as a monetary asset would actually do very, very well in that scenario, because like Bitcoin is literally the bigger money. I've always been of the opinion that ETH, the asset, is one of the greatest monies that will ever exist, just because it has some of the very like credibly neutral properties of Bitcoin with the productivity of the Ethereum network. To me, like my answer is always going to be Ethereum surprise, just because like Eigenlayer is first, and it was built on Ethereum using smart contracts, using Ether, and then Babylon, the Bitcoin restaking system, is built as a response to Eigenlayer. It's like the Eigenlayer copycat. And so even though Bitcoin has the highest market cap, like Eigenlayer has all the legitimacy, they have all the connections, they have all the ABSs, which is actually where the yield is going to be coming from. First, unsustainably via token issuance degen stuff, and then later via actual real like fees being paid to these ABSs. And so to me, I do think there's a very strong premium on the fact that Eigenlayer came and was birthed restaking into existence using ETH, the asset, on the actual true smart contract platform. There's also fundamental constraints on Babylon as to what it can do. Like, it does Bitcoin restaking, but it's not one-to-one equivalent. It has some of the constraints that Bitcoin has. And so the amount of expressivity about ABSs that can come to ETH, the asset via Eigenlayer is just increased just because of it's on Ethereum, it's on the expressive chain. So that's my answer.
My question is, once more programmability comes to Bitcoin, which is happening with different algorithms and scaling solutions of Bitcoin, like what's stopping another Eigenlayer on the Bitcoin ecosystem?
Yeah, so the question is like, once Bitcoin like kind of increases in the expressivity, like why can't Eigenlayer just kind of tap into ETC, the asset? I'll just say like, why can't Eigenlayer tap into its own Eigen token? Like they have Eigen, the token, as part of their like dual staking model. And you can also just use USDC for staking, and so it'll turn into like choose your own money for like what you want. And so like, yeah, Bitcoin is money too, ETH is money. It'll be up to the market, and so I think this conversation actually collapses down to like, what do you think is going to be the money that dominates in the crypto space? Which I've been on record as saying it's ETH since like 2017. Lucas?
Yo.
Yo.
I don't know if you guys know this, but Charles Hoskinson was listening to this for a few minutes.
Get out of here.
Ask,
Cardano's in the building.
Yeah.
Wow, good thing I didn't make a Cardano joke.
Let's get left curve here. What does Cardano do this cycle?
It goes higher. Like you don't want to show.
Wait, higher in the market cap stack? I think that's the question.
Oh yeah,
Higher versus US dollar. We don't really care about that. Is it going up or down in the market cap stack?
down, but higher in dollar terms. You don't want to
everything's
short
going
it.
higher in dollar terms.
Exactly.
Cardano's a mid-trade now, I think.
Right. It already had its time, right? It's over.
Yeah, it's kind of like a dino coin now. If you want to do like an L1 trade, there's way sexier stuff. Like you can trade Sui or Aptos or all these. Say like there's so much hot new stuff on the market. Charles is, yeah, he's kind of checked out. He's having a good time. He's taking like bubble baths.
Ice
and-
baths.
Yeah, like whatever.
4
good for
minutes of
him.
Charles Hoskinson.
He's
just
flourishing,
ice bath.
moisturized, etc.
One thing I did notice not too long ago, which made me very bullish on Solana, was a lot of my previous Cardano reply guys who were hating on all my like ETH tweets. I saw them starting to be reply guys to Solana people, to like Mert and Anatoly, and I'm like, oh, they're cheating on me with a different ecosystem. They're different reply guys now. I'm like, oh, that's made me actually kind of bullish Solana.
God, not only is
Great-
this our
great
first,
question.
our
Great
first
question.
live audience, we also had fucking Charles in the audience. It's amazing.
Wait, oh, I did not hear that part. Charles was here?
Charles was watching.
Yo, bring him back. Get him on stage.
Come back.
Let's get some of his dumb questions.
Thanks, Charles.
Okay, one more dumb question. One last dumb question until we go.
Nice.
Guilty pleasure pastime in crypto and why?
Good question.
Can I actually throw
That
this
is
back at you?
awesome.
What's yours? What's your guilty pleasure pastime in crypto?
So yeah, I'm a meme degenerate, and I've got like a bunch of friends, and we just all aggregate like the goofy degenerate memes, and then I take it like to a meta level, where I start plugging it into AI to create more degenerate shit, and then just spreading it around, because I really appreciate good trolls, and that's definitely my guilty pleasure pastime, as well as gambling on occasion.
Well, that's a good one. I think like the meme culture within crypto is like one of its greatest strengths, and I think that's a great pastime. Mine is watching number go up on the farms. Like I'm a TradFi guy. I like yielding, and I just like watching it go from 0.00 to like 0.001. Yes.
I feel like I'm in a similar boat as you. Like on the one hand, most of my life is spent like trading, and I do actually have like a pretty good system I've developed. It's very analytical, but then I have this group chat I'm in where people just throw a meme out and I buy. It's so good for me, I think, because like I can just really like exercise these demons that just want to ape stuff. Even if it's not like a large amount of money, it keeps me from doing really dumb crap with like the real funds. And like I love it. There's something really fun about it. Like I really love memes. Like Eric and I have gone back and forth a lot because I think memes are actually like a legitimate asset class, and I feel bad for the boomers because they just figured out Bitcoin like 15 years later, but now like we were already gone. Like we're already like trying to tell them why like dogs with hats are money now.
Right,
And they're just like, I can't.
Facebook and we're on TikTok.
Yeah, it's exactly what just happened. So yeah, that's what I do.
There was like the meme coin mania that started like 6 months ago, and this was when like Harry Potter, Obama, Shinu, Inu, 420
Harry,
was like a thing.
Obama, Sonic, Inu, yeah.
And like it was Eric Connor.
AKA
that was,
Bitcoin.
I was trying to like understand this ecosystem, and there was like no way that I was going to catch up to like figuring out the meta on this thing. But like Eric Connor put it nicely for me, where he was like, yeah, just like you go into the telegrams, and like when the memes stop making you laugh, you sell. And you go and find a different one until then you find the ones that have funny memes again, and you buy that one. And literally that's the meta, is you just follow Telegram groups around, and if the memes are funny, then you buy.
I think it's similar to memes, but I experienced the same feeling with minting something. I think the process of minting something has great pleasure to it, and the scarcity involved as well is also really significant for me to know that you're like one of
Oh,
1,000.
and it's a fresh mint, then you have the lotto ticket game. Like, what characteristics did I get?
Especially when there's no cap on it, you can mint 100 of them. Like we did that, I remember with Wolf Game. That was like peak euphoria for me. We did very well with minting Wolf Game. And yeah, I just try to look for those. I hope that comes back.
Good old days.
The good old days. Guys, this has been absolutely fantastic. This is the first podcast that we've done in real life. Like 50 people plus Charles Hoskinson in the audience. This was absolutely fantastic. Big shout out to ZK Singh for letting us steal their podcast. They're not even a podcast booth. What do you call this thing? Podcast arena? Yeah.
Thank you, ZK Singh.
Thank you, ZK Singh. And thanks everyone for watching and sticking with us. Thank you. Sorry to all the people that were here before we came in formed this space. Really appreciate it. One last thing, Alfalfa Podcast. Where is it? How do people listen to it? Where should people go?
Everywhere. We live stream every Wednesday at 5 p.m. Pacific. We also have The Irresponsibly On with Steve and Eric on Thursdays at 5 p.m. as well. And then podcast is on all platforms. Alfalfapod.com is where all the links are.
Thanks, guys. I'll see you back in. I'll see you guys when we do our hike right before permissionless, and I'll see you back in San Diego in December.
Yes.
Yeah, bud. Thanks,
Thanks,
for
man.